we're going to go ahead and get started. Sarah and Matt, welcome to our regular series here of the LandGate webinars that we've hosted. And for those of you, then I see some names in the attendees list, some of the regular attendees. Welcome back. As some of you know, we host these webinars, and these are really intended to be educational type a series here for property owners and landowners across the United States. I'm going to go ahead and share my screen a little bit and show you all where you can get some resources from some of the other previous webinars that we posted. I've just gone here to landgate.com. I clicked on landowners, and it brings you to this page here where you can get a ton of information about how our marketplace works. We'll talk about that a little bit more, but then also where you can get resources for all of the different types of revenue potential opportunities on your property, be that carbon credits, which we're going to talk about in depth today. Could that be solar rights, wind, battery storage, data centers, things like that. A really, really good resource for you that's open to the public. All of this is free, but a great resource for landowners, farmers, ranchers, forest owners, things like that out there. So please utilize this. As you know, this is a recorded webinar. You all will be receiving a recording of this through your email. Also, this is, we really try to encourage interaction during these webinars. If you have questions, feel free to ask them. This is a really interesting topic with carbon credits, and we've had some previous webinars, and the market keeps shifting and evolving, and we have some experts on the call here today. So leverage them and ask questions. Feel free to submit a question in the Zoom module there. We're going to do our best to get those questions answered real time. If we don't get to your question, we will follow up with an email and we will get your questions answered. Before we kick it over to Sarah and Matt, I want to show you all, just remind you all again, how you can utilize LandGate as a property owner, a landowner. It is an open marketplace. We do not charge a listing fee to post your property up on LandGate. And it is not just a marketplace where people sell property. We are also a marketplace where property owners can post their property to try to earn revenue from solar, wind, battery storage, EV charging, carbon credits, all of these different types of things. And you can interact with professionals who are sourcing deals, just like Matt and Sarah here on the call, but you can go ahead and get your property out in front of those specific types of resource professionals who are trying to probably connect with you right now anyway. So it's a kind of a different take on a marketplace. Again, there is no listing fee. There is no commission if you choose to accept a deal that comes through LandGate. So we're a little bit different there. And then also on the sales side, it is an open marketplace. If you're interested in purchasing property or things like that, you can come to LandGate, absolutely free, jump into the marketplace, set filters, look at property, and start digging into them. If you would like to start getting information about real estate, doing due diligence, things like that, getting access to property owner information and parcel boundaries and different types of data across the United States, for $10 a month, you can go ahead and subscribe to this tool that you're seeing here, and you can get access to all of this different data where we provide information about buildable acreage, infrastructure, all of those things nationwide for solar, wind, oil and gas, carbon credits, which we're going to be talking about today, contamination, soil, all of these different resources appended to parcels, and you get that nationwide for $10 a month. So I will end my pitch there because that's not why people are here. They're here to learn about carbon credits. And let me stop sharing my screen. I'm going to kick it over to Sarah Ford and Matt Olson of Forest Carbon Works. Very high quality company that is in the carbon credit industry, and they have a very nice presentation for you all today. Again, if you have questions, feel free to ask, but Sarah and Matt, go ahead and take it away.
Great, thanks Craig, and thanks for hosting us today with you and LandGate. Hi, everyone. It's really great to be here. Again, my name is Sarah Ford. I'm the Chief Forestry Officer with Forest Carbon Works in Chestnut Carbon, and I lead our natural resources team, which is comprised of foresters spread regionally across the country. It also is comprised of our forest inventory program, and I also manage our operations for our forest restoration or tree planting program called Chestnut Restore. I'm based out of Northern Vermont, where I've been practicing forestry for going on 2 decades now. Joining me today here, we have Matt Olson, who also is based out of Northern Vermont. Matt is one of our membership advisors on our sales team, which is focused on enrolling landowners in our carbon program for private forest owners, which we're going to tell you about today in our presentation. So for today's presentation, we're going to give you some background about who we are, an overview of carbon offsets, market demand, and access. We also are going to describe how carbon projects are developed, talk about our sales process, our contract terms, and then lastly, we will talk about just some of the financial benefits of carbon projects, in addition to highlighting some of the members that we have in our carbon program, which we call Forest Carbon Works Conserve. We plan to leave plenty of time at the end of the presentation today for questions, so please do post questions as you have them in the Q&A, like Jordan mentioned, or save them for the end for us to answer live. So again, we are Forest Carbon Works, which is part of Chestnut Carbon. At Forest Carbon Works, we develop improved forest management projects, which are often referred to as IFM. And what these are projects that promote forest carbon storage and sequestration when compared to surrounding forests. Also at Forest Carbon Works, what we're really doing is working to provide landowners access to carbon markets, diversified revenue streams, which is providing a means of forest conservation and protecting family legacies. To date, we've enrolled landowners and properties in our Forest Carbon program in more than 33 states. We were founded in 2016 under EP Carbon, which is another carbon company that's focused on international carbon project development. In 2022, we joined Chestnut Carbon under Kimmeridge, which is an alternative asset manager in the energy sector. At Chestnut, our main focus is on restoring native biodiverse forests on marginal pasture land through our afforestation project and program in the southeastern United States, which is where it's currently focused. Under this program, we've succeeded in planting more than 10 million trees thus far across more than 17,000 acres in 4 states and are growing. So at FCW, or Forest Carbon Works, and Chestnut, we have a really strong team with more than 3 decades of combined carbon project experience, including working in multiple registries and markets, developing many projects. At FCW, our team is a remote-based team with more than 50 members currently spread across 17 states, and also growing. We're using a proprietary carbon inventory land evaluation tool to streamline costs and maximize efficiency, while also working with landowners, stakeholders, and communities in the areas where we're based to really, again, promote conservation, biodiversity, and also deliver quality net zero solutions. So something that's really important to recognize, I think, with what we're doing with forest carbon markets and conservation is really the potential our forests have for carbon offsetting. More than 1/3 of our forests, of our country, is forested, with many of these forests being highly productive, as you can see by the map shown here on the screen. The darker green areas on the map are reflective of areas that have higher amounts of live tree biomass and therefore are more productive, offsetting more carbon from the atmosphere. Also, with our forests, more than 60% of forests in the US are privately owned, and 39% of these are family owned, meaning that this still also represents significant potential for carbon offsetting. In addition, our family forest ownership demographic is aging, with the average forest owner being 70 years old, meaning that these forests really are at risk for things like generational transfer, parcelization, development, and really just increased fragmentation. Therefore, carbon markets really are presenting just this increased opportunity in providing this for financing long-term forest conservation, keeping forests, in addition to securing our forest legacies. So again, really important and significant when we think about the fact that forests in the US are offsetting around 16% of our annual US emissions. So while our carbon markets are rewarding forest owners for conservation and sequestering and capturing carbon, there also are different varieties of carbon credits. Two types of these credits are removals and reductions or avoidance credits. Removal credits are those that are generated from or come from the actual capture and removal of carbon dioxide from the atmosphere. This frequently is from things like tree planting or reforestation activities. Avoidance credits are from activities that reduce planned greenhouse gas emissions through things like changes in management or crediting standing stock in a forest for planned change in management over a certain duration of time. Frequently, removals credits are seen as more valuable to buyers because they are accounting for and crediting the actual capture and removal of carbon dioxide from the atmosphere. So the carbon market is not only attractive to forest owners as an opportunity to get paid for conservation, it's also a tool, a really important tool for companies to help meet their net zero goals. There's starting to be an increased amount of research that's actually showing how companies and corporates that are using carbon credits are actually reducing emissions faster, and that even with those that are buying higher quality credits are having greater amounts of emissions reductions. There was a study published by Trove, which is now actually MSCI, last year, where they surveyed more than 4,000 companies on their emissions reductions, and they found that these companies that were purchasing offsets were actually reducing emissions twice as fast than those that were not using offsets. And also that of those companies that were using offsets, the ones that were purchasing higher integrity and higher priced credits were reducing emissions more than those that were purchasing lower value credits. So really just speaking to the different breeds, flavor, quality, and types of carbon credits and uses out there in the market. So with more companies that are committing to emissions reductions goals, what we're also seeing is significant growth in the carbon market. The chart that you see here is showing how the value of the voluntary market has really just increased substantially and cumulatively over the last 20 years to now a cumulative value of more than $10 billion. Additionally, what we're also seeing to go with that are record high carbon prices, specifically in the forest carbon offset category, nature-based solutions. Just last year, we saw improved forest management carbon credit pricing increased by upwards of 25%, which is really significant and really supporting this side of the market and the business. Also, just from 2020 to 2021, we saw transactions in the carbon market double. So again, just speaking to the increase in volume and interest and investment in carbon markets. So our nature-based solutions really play a critical and crucial role in mitigating climate change by just utilizing our existing natural ecosystems to both capture and store carbon dioxide from the atmosphere like they have been doing for millions of years. And so these approaches, such as reforestation, wetland restoration, improved agriculture, forest conservation, are helping to mitigate climate change, but also have many co-benefits that go with them. These include things like enhanced biodiversity, water quality improvement, controlling of soil erosion, and supporting local communities and providing climate resilience. Additionally, nature-based solutions are scalable and considered by many to be more scalable than technological alternatives, things like direct air capture as one example, that is still a developing technology, while effective, but very costly and hard to implement at scale. Nature-based solutions like forest carbon offsets are a tool that we have available now and can be widely applied and implemented across large areas, really without the same financial barriers or technological barriers like some of the newer developing technologies, with forest carbon credits being one important category of these. So there are a wide range of carbon credits on the market of varying qualities and values, like I have alluded to a bit already. Frequently, lower quality credits are of lower value and price. At Forest Carbon Works, one of our primary roles as a developer is really to maintain quality and integrity with our forest carbon credits. And so we are doing this by ensuring that our credits meet these rigorous quality standards, like you see listed out here. The first of which is really confirming that our projects and our credits are additional, meaning that landowners and forests that we work with really truly are at risk of harvest, and that the carbon project that we're working in is protecting the forest in addition to reducing harvest levels. Secondly, we also maintain permanence and durability within our program and the credits that we're generating via our long-term commitment that we do require for enrollment in our program, which is in turn supporting co-benefits like soil and water protection, wildlife habitat, biodiversity protection. We are conservative with our measurements, ensuring we're not over-crediting, definitely not double counting. We actually only issue removal credits, which are based on the incremental growth of the forest. And then lastly, at Forest Carbon Works, all of our projects are third-party verified, which is a really important component of a high-quality project. We're only using approved methodologies that were peer-reviewed, have been tested for a very long time, and also are approved by carbon registries. So another way in which we are working as a developer in the carbon space and working to improve market access. Carbon markets, as probably many are well aware, have really not been widely available, historically not being available to landowners owning less than many thousands of acres. Our program at Forest Carbon Works is available to landowners owning as little as 40 acres, which really has opened up access to private forest owners across the United States. Our program also is available in every state in the continental US. We offer competitive payments. We have a revenue share option, which Matt is going to go into in more detail shortly here. And because of our longer duration contracts, that does yield these higher value credits, especially with all of the co-benefits attached to them. That means that we're able to just offer increased and premium payments for our landowners. Carbon markets and projects are very complicated, and getting into them can be very overwhelming. We manage all aspects of this, all aspects of the enrollment process for our landowners at no cost. And we also continue to support landowners or our members over the duration of the life of the project. So even after they have enrolled. We also take a really individualized approach at Forest Carbon Works, with each landowner being connected to their own membership advisor and their own regional forester as well. On the credit sales side, we're really selective of our credit buyers, only choosing those that really have proven commitments to emissions reductions and are planning to use and retire the credits that we are selling to them. And then lastly, we have a really experienced team that excels at navigating all of those complexities of carbon markets and project development, everything from design to measurement, reporting to credit issuance. So like I mentioned right in the very beginning, the forest carbon program that we have at Forest Carbon Works for improved forest management is called Forest Carbon Works Conserve. And again, in this program, we manage all aspects of the development process. So what that means is that we're managing the design of the project, the measurement of the actual amount of carbon in your forest, both remotely and via a site visit, reporting on quantification of how much carbon you have, the verification process, so bringing a third party out to check on all of that carbon that we say that you have in your forest. We issue credits attached or via the carbon registry that we're using, which is Vera, for our improved forest management project. And then we also sell the credits. So we do everything from start to finish. Some of the benefits that we offer for joining or enrolling as a member in our program, again, are the annual payments that are guaranteed every year. We have a lot of forestry expertise within the company that our landowners have access to. This includes harvest flexibility and support and oversight during harvest when needed. Our payments for our program typically start at around $10 per acre per year, but these do fluctuate depending on your forest type and productivity. And again, we have a lot of support both from our sales side and the forester side, just to help manage all of those complexities of being in a carbon program, both during enrollment and after enrollment. As far as eligibility, to be eligible for our program, FCW Conserve, you have to have 40 acres of forest. It has to be privately owned. And you do have to own your timber rights. In addition, we also require you to enroll all of your forested land. Also, we are available, our program is available in the entire continental US and Southeast Alaska. And all forest types qualify for our program as long as your forest is old enough and big enough, 5 inches in diameter, a minimum of 15 feet tall. We are not particular. So with that, I'm going to hand it over to Matt right now so he can walk us through our enrollment process.
Great, thanks, Sarah. And hi, everyone. Thanks for joining us again today. So I'm just going to take a few minutes to go into a little bit more detail on our enrollment process and go over some of the details on just our program requirements and benefits, and just share a little bit more about the annual payments that we offer. So to start out here with our enrollment process, really the way the process begins is by filling out an application on our website and connecting with a membership advisor on our team, such as myself. And then within a couple of weeks after that, our team will review the application and other details about the land, complete an initial assessment to determine how much we can offer for your membership offer. Following our sharing of the membership offer, if you do decide to enroll in the program, we actually send out the first annual payment within 30 days of enrolling in the program. And then following enrollment, within a few months, we do send a local forest technician out to the property to conduct an on-site carbon inventory and basically verify the initial carbon stocks that are in the forest at the time of signing up for the program. But really from there, on an ongoing basis, the main thing that we ask from our members is really just to complete a really short annual survey. For most people, it takes maybe 10 to 15 minutes to complete, just letting us know if anything major has changed on the property. But really, for the most part, it's our job here at Forest Carbon Works to take the complexity and everything of the carbon market and really distill it down for our members into this really simplified annual survey and this annual payment that we send out at about the same time each year. You can go to the next slide, Sarah. So our program begins with this initial payment period that can last for a minimum of 25 years and then up to a maximum of 50 years, really just dependent on the preference of the landowner. So there is some flexibility as far as how long the payments from the program run for. So during the payment period, we do offer two different payment options for our members. The first is really just this fixed standard per acre amount that lasts for the entire payment period. And the second payment option is what we call our revenue share payment, which essentially allows for landowners to benefit from any increases in carbon pricing over time. And I'll go into more detail on these two payment options in another slide coming up here soon. But during the payment period, we also allow some flexibility for harvesting and sustainable forest management during that time under forest certification that comes from Forest Carbon Works. And meanwhile, our members always have access to our entire team of regional foresters who are really here to serve as a resource to help answer any forest management related questions or help advise on any upcoming harvest to make sure that it meets our program requirements, as well as that forest certification. And then lastly, here again, during that payment period is when we just ask our members to complete that short online annual survey. So immediately after our payment period ends, our members then go into what we call our monitoring period, which again, depending on the preference of the landowner, can last anywhere from a minimum of 35 years up to a maximum of 100 years, what we refer to as our extended monitoring period. And really the purpose of this monitoring period is to, first off, make sure that the forest is being conserved to some extent into the long-term future, but also to really make sure that there is this sense of permanence and long-lasting effect from the crediting that took place on the forest during that payment period. But during the monitoring period, there is significantly more flexibility for harvesting during that time. We also don't require any forest certification during the monitoring period. And then we also no longer require that annual survey during this time. And just this last point here is that for landowners who do decide to opt into that 100-year extended monitoring period, that does make them eligible to potentially have higher increased payments during that monitoring, or excuse me, during the payment period, just as an added incentive. So here, just to touch a little bit more on the financials of the program and those two different payment options that we mentioned. Again, that first payment option that we refer to as the standard payment model, for many landowners, that standard payment can start somewhere around $10 per acre per year. However, for many landowners that have higher acreage properties or more productive land, in a lot of cases, the standard payment can actually begin much higher than that, sometimes upwards of $20 to $30 per acre per year. And then the second payment option, that revenue share model, which again really exists to allow for our members to share in any future upside in the carbon market. Really any landowner that we work with, that we share a membership offer with, we always also include just a conservative projection of what those revenue share payments might look like in the future, just to make sure we're providing a really good look so that people know what to expect in year 5, 10, 20 of the program if they choose to opt into that revenue share model. So here, I just wanted to quickly touch on our referral commission payments, which really anyone is eligible for, whether it's a current member, a forester, realtor, financial advisor, really whoever it might be. that enrolls a landowner into our program who does decide to enroll. So just to give a quick overview of how those referral payments are structured, we pay $2 per acre for any acreage enrolled up to 1,000 acres. We then pay $1 per acre for the next 1,000 to 2,000 acres enrolled, and then 50 cents per acre for any remaining acreage over 2,000 acres. And ultimately, we were able to pay up to $10,000 for this referral payment for any individual landowner that does decide to enroll in the program. So this map here really is showing a breakdown of the acreage across the entire country that is enrolled in the Forest Carbon Works Conserve program. So as you can see from some of the darker shaded states here, some of the areas where we definitely work most heavily. Some of those states include Oregon, Montana, Virginia, West Virginia, as well as Georgia and California. But really, anywhere across the country and just about any state at this point that has forest land, we're currently working with landowners to assess, eligibility for the program. And in this last slide here, we just wanted to highlight a few of the members that are currently enrolled in our program. So as you can see, it really spans across the entire country from New York to Mississippi and Oregon. And using Oregon as an example here, our landowners definitely vary quite a bit from a smaller family forest of 99 forested acres in Oregon up to some of the larger properties that we work with, such as the China Peak Ranch, which is at almost 10,000 forested acres in Oregon. But really across all our members, there are definitely a few key reasons why landowners choose to enroll in our program. The first being family legacy, and in many cases that being tied to their land and really wanting to make sure that the land is passed down to the next generation to be enjoyed by their kids or grandkids or whoever it might be. Many of our members are also very conservation minded and want to make sure that the forest does remain protected and remains intact into the long-term future. And by enrolling in this program, it does provide some sense of assurance for that. And then lastly, the obvious benefit of receiving passive annual payments for a minimum of 25 years and just the financial benefit that can come from that as well. So that's really the end of our presentation here. So Craig, we can go ahead and open it up for Q&A now.
Absolutely. Well, Matt and Sarah, well done. Very, very good. Like I said in the beginning of this webinar, this presentation will be made available, so you will all receive this in the follow-up. When you get a recording of the webinar, you'll also receive this wonderful PDF put together by Forest Carbon Works. But a lot of interest, a lot of good questions came in during your presentation, so I'm going to go ahead and start going through those. James, we're going to start off with you, and it's good to see you in the webinar again. Hope everything is well with you. But he's got a good question about what can be done once you've enrolled your property in the program. What type of management practices, as far as tree thinning, forest fire mitigation, any type of management procedures to maintain a healthy ecological system there, what can the landowner do to help maintain their property, make sure they're reducing the risk of forest fire, all of those different things when they're enrolled in your program?
Yeah, that's a really good question. So we have a few different ways that we allow for that. So the harvest flexibility that both Matt and I referred to is specific to what we call a 10% allowance. We set aside 10% of every landowner's forest stocking specific to climate smart forestry. So every one of those specific practices that were just mentioned for forest health, fuels work, everything to manage and maintain a healthy forest would fall under that umbrella. So anything related to promoting uneven age forest structure, single tree selection, low intensity thinnings, those all would be allowed under that 10% we set aside. And so we're setting that aside, meaning that there's no impact on crediting to the landowner, because we know how important it is to maintain healthy and productive forests. And so that is a really big part of what my team, the natural resources team, is doing and working with and overseeing with our landowners, looking at what are these practices that every landowner would like to manage for, and how will it work within our program. We do have allowances to manage and harvest beyond that 10%, especially for larger landowners as well.
In the event where you mentioned like selective harvesting or tree thinning, would the landowner be able to monetize any timber that they're harvesting from their property up to the 10%? Is that something that your program allows, that they could actually monetize that thinning, whatever board foot they would get off their property?
They are allowed to monetize the thinning or the harvest. Any commercial harvest is required to be Forest Stewardship Council certified. We manage all of that FSC or Forest Stewardship Council certification. We have our own group or certificate. So that is another added bonus, in our opinion, for a landowner. So say if a landowner needed a forest management plan, that's part of the forest certification requirement. We would take care of that for the landowner, but the landowner is certainly able to monetize that timber sale, and that is their land, their trees, as part of conducting that management.
Awesome, that's terrific. Hannah submitted some questions earlier, and it's kind of along the same lines of, and this is typically the questions we get for, at least, when people call LandGate and ask what they can do, is what are the different restrictions once they're in the program? So again, back to the revenue side of things, how does that look with, let's say, like Hannah's question with the oil and gas? What happens if they have an oil and gas lease on their property, or an agriculture grazing lease, something like that? How does that impact? Can they do that still with your program? How does that look?
Matt, do you want to start with the oil and gas lease?
Sure. Yeah, so really, as far as our program goes, our program is really a carbon lease. So any other kind of leases or other programs that take place outside of that, in a lot of cases, it doesn't necessarily conflict with the carbon program. So, for example, an oil and gas lease or something along those lines, in most cases, as long as it doesn't interfere with the program, really meaning that it would require any kind of clearing of the forest land, then in a lot of cases we can work with that, but we always want to make sure we take a look at the details so that it's not going to be an issue.
Same goes for an agricultural lease. Typically, there wouldn't be any overlap with the program, and exactly like Matt said, as long as there's no impact on the trees, the forest.
Very good, very good. Hannah had a follow-up question to this, and I had never really thought about it, even though I probably should. I'm sitting in the Rocky Mountain region where the forests tend to burn every once in a while. That might not be an issue so much in Oregon or the West Virginia area. But you had a good question of what happens if you're in this program and something happens outside of your control that radically reduces the amount of carbon that your forest can sequester, such as a forest fire, invasive species, mistletoe or beetles or something like that. What does that look like? Is there any guarantees built in? How does that look for the landowner?
Yeah, so we call that an unintentional reversal as a result of a natural disturbance event, whether it be a weather event, hurricane, tornado, ice storm, or a forest fire, or a pest or pathogen incident in the forest. And so each registry has a buffer account that requires us to contribute a certain percentage of the credits that we issue to that buffer account for that very purpose. So It's upwards of 20% actually of our crediting is going into that buffer account that's held by Vera. And so what that buffer account does is it's protecting against these unintentional reversals where your carbon stock would lower below what you're able to credit back. And so that account is like an insurance pool, is there to pay back the credit. So both us and the landowner are not held responsible if that situation were to occur.
Very good. Yeah, that was a really good question. And before we go to, because I think there's going to be some questions, Sarah, how exactly do you measure the carbon? I think it's a really good one. You guys will be able to touch that. But before we move on to that one last question. I've gotten this quite a few times and I don't know how to answer it, is how do conservation easements work with your program, both with properties that may already be in a conservation easement and then some folks that are probably out there wondering, okay, this sounds like a really good idea. I'm thinking about signing up with Sarah and Matt and then maybe doing a conservation easement the following year, the next year. How do those two interact together?
Matt, do you want to take conservation easements and I'll take measurement?
Sure. Yeah, so conservation easements in a lot of cases can work with our program. It really just comes down to what specifically is being restricted in that conservation easement. So a lot of conservation easements that we see are just restricting development on the property. In most cases, that works completely fine with our program. Really, the kind of main situation where we run into issues with eligibility with our program is if there's a conservation easement in place that really altogether restricts timber harvesting. In that case, it makes it so that usually we just can't have a viable project. Really, the reason for that is these carbon projects are basically kind of founded on the idea of additionality, meaning a guarantee of more carbon sequestration occurring with this program than there would be guaranteed without it. And if there's already a legal contract in place altogether restricting timber harvesting, there's really no actual additionality taking place. So that's really the main reason we're just looking out for that one piece. But again, that's something that we always like to review because in a lot of cases, we definitely can work with conservation easements.
Wonderful. And then, and Sarah, how, I'm sitting on 40, 60, 70, 80 acres out there and I'm interested. How do you actually measure the amount of carbon on that individual and what they would at the end of the day, what they're probably most important to them is what they're going to get paid on?
Yeah, carbon is measured in numerous ways currently, but really to actually understand the amount of carbon in a tree and biomass, you need to know the species, the height, and the diameter of the tree. Those are the foundational measurements that are needed to actually calculate the live tree biomass, which then you just take half of that to get the amount of carbon in the tree. And so that's just a very raw, rough, easy way to get carbon based on a bunch of existing formulas that exist that compare ratios of it's called allometric equations that help you calculate branch size, trunk size, root size based on a lot of existing research that has been done. So you don't have to measure each individual little part of the tree. That's how you measure the carbon. How we are measuring carbon is by taking those measurements with that proprietary inventory tool that we mentioned, which is a photo-based app that we developed in-house that streamlines the measurement process. So traditional forestry, you go out to plots and you measure trees of certain sizes, collecting all of those measurements within the plot. It's very time consuming. It's a very important way of evaluating a forest. Via our inventory tool, we're able to essentially streamline a lot of that measurement process in proximate to all of the areas where we have our landowners with the local forest technicians that Matt mentioned. Satellites and remote sensing and LiDAR are also capturing biomass measurements currently at not such a finite scale, using all of the existing data that we have just at different levels of granularity. So there are a lot of different ways in which we're measuring carbon currently. That was a kind of a lengthy explanation into that.
It sounds like there's a lot of science that goes into it.
There
That's
is.
that sounds pretty intense. There's probably some folks listening that obviously don't have trees on their property, whether they're in the Great Plains region or just an area where maybe they've been traditionally a forested area, but it's been now farmland or something. For the folks listening, do they need to have trees to participate in your particular program, or what would you say to the folks who don't have trees on their property?
So for the forest carbon program that we were talking about today, you do need to have trees because that is the product and the methodology that we're using. Under Chestnut, we have a different type of program where we're planting and growing trees. So you don't actually have to have trees for that program. It's a brand new program that we're launching that is soon will be available for private non-forested landowners. I know there is a lot of interest in other types of carbon programs as well, like grasslands, soils, and those are that is a carbon program area that is growing, and there are other developers that are starting that do have products available in those areas. We are not one currently. We only have a forest carbon product and a reforestation or afforestation, so a tree planting forest carbon product.
If someone's interested in that afforestation, the planting of trees and getting enrolled in the program, can they contact you?
Yes, please do.
Awesome. So yeah, anybody out there interested who may not have an active tree stand on their property, but is thinking about planting windbreaks or taking a row crop field back to forest, these are the folks to talk to. So reach out to Matt and Sarah there. Mark had a question that was interesting, and he asked, why is a harvest a risk of releasing carbon when the majority of material harvested is continued in carbon storage in the form of lumber, pulp, paper, etc.? Can you expand on that for Mark?
Yeah, that is a great question. So the process of cutting down trees or harvesting trees does result in, they say approximately 50% of that wood material is locked up in long-lived wood products. So that carbon does stay and is reserved essentially, depending on what that wood product is that it goes into. But there still is a significant portion of the carbon that is released through the process of actually harvesting the tree via the low-grade pulp, even sawdust materials that still result in carbon being released back into the atmosphere, and even just via the logging practices themselves, harvest practices.
Great, thank you. Let's shift gears really quick because there's quite a few what I consider professional real estate investors on the call here. And one of the questions, this is coming in, looks like that one from Rick. Rick, thanks for the question. How does this work if I own 100 acres of forest land and I've enrolled it in your program, but then I go to sell that piece of property? What does that encumbrance look like? Can I do that? Does the new owner get enrolled in the program as well? How does that look?
Matt, you want to take that?
Sure. Yeah, so the program basically stays with the land under any transfer of ownership, and we definitely don't restrict anybody's ability to sell or transfer the land. Really, all that we ask is that someone just lets us know so that we can roll over the payments and everything to the new landowner at that point. We're always happy to hop on a call with the new landowner just to go over, all the program requirements and benefits and everything at that point.
Awesome. And again, staying on the path of the kind of the real estate investor, the buyers that may be on the call who are looking at a piece of property, maybe haven't enrolled in a carbon, maybe this is their first introduction to carbon credit programs. Matt, how would an investor or a buyer, what lens should they be looking at property? If it has forests on it, it has trees on it, what do they need to be looking for? Do they need to be looking at the percentage of the forest that's there, the height, if I'm an investor and I want to maybe look at a piece of property and capitalize on one of these opportunities, what is it that I need to have my eye open for when I'm looking at potentially purchasing a piece of property?
Yeah, yeah. Well, because we generate what are called these removal credits, a lot of the crediting potential does have to do with the amount of projected growth in that forest over time. So certainly in most cases, because of that, a tract of land in the Southeast United States would often have much higher crediting rates than, say, a tract of land in the northern Midwest states. So regionally, it can vary quite a bit based on that. As far as the specifics of the forest types, things like that, I think Sarah could probably add a little bit more detail on that.
Sure. Yeah. So we say you do need to have a minimum percent canopy cover. So if the canopy cover is really, really sparse, we require a minimum of 10% canopy cover for it to qualify as forest. And obviously we need that 40 acres to begin with as well to be eligible. Very, very young forests may not result in a massive amount of crediting. So it's nice to have a forest of varying ages, younger trees and older trees, so structural diversity within the forest. A forest that has been recently harvested and is still returning or regrowing will take a while to get back to the point where it's ready to issue credits. We do have a minimum diameter and a minimum height, 5 inches in diameter, 15 feet in height. So those are other things to look for. We can obviously, certain parts of the property might have different ages and types of forest that will impact credit yields across the property. So we evaluate all of it. We look at everything. We look at forest management plans. We look at remote data. We look at on the ground data to really put together the best offer and the best crediting rate for us and for the landowner. So we understand what that looks like for each individual property in our assessment process.
Awesome. Very good. Very good. Kent had a question going back to, prescribed burns and forest fire mitigation. He said, in the Southeast, our longleaf forests need prescribed fire for biodiversity and sustainability. Does prescribed burning affect the carbon credit calculation and eligibility, or does that fall into that 10% of maintaining a healthy ecosystem?
It is okay within the 10%. We have a couple of our foresters are located in the Southeast, and I know have worked with a handful of folks who are managing longleaf in particular, and so be happy to directly connect anyone if they want with additional questions. But yes, we do allow prescribed burning within the 10% and anything in under the 5 inches as well. We made sure to include that in our project design, understanding that that is a really important management component for longleaf in particular and some other forest types as well.
Very good. Very well. We're getting close. Let's maybe try to get one or two more in. Dixie had a question. I think this ties in very well with the chestnut component. Can a landowner out there, if they have 50% of their parcel, let's say it's a 200-acre parcel, 50% of the parcel still in forest land, let's say in their southeast part of the country, and they would qualify for your program, could they also enroll the other portion of their parcel in a chestnut program where they're planning on, maybe they're done farming or ranching, whatever it is, but they want to put trees in there? And how does that look for them?
Yes, they can absolutely do that. We would be happy to support that. We own land, the land that we have planted trees on, we own, and some of that land is forested in addition to having been non-forested, which we've reforested. So we do have some company-owned land that has done exactly that. We've layered the carbon projects, and one is afforestation, reforestation, one is forest carbon. So yes.
Awesome. I think that's going to apply to the majority of folks here, where they have some of their parcel underneath tree canopies, and they could potentially add some additionality there with planting trees. So that was a very good question. We're getting to the top of the hour here. I think this will probably be our last question we'll be able to handle. If there are questions that we didn't get in this, we will reach out. Either we will answer them, we'll have Matt or Sarah answer them. So you will get your questions answered. But how does one of the criteria you mentioned is that the landowner needs to make sure that they have the rights to harvest timber. How does this is probably a question for Matt. If I'm a landowner listening, Matt, how do I know whether or not I have the rights to harvest timber on my property or not?
Yeah, that's definitely a great question. And yeah, I mean, as we talked about, one of the main things we see that can prevent that is conservation easements. There are a lot of tax programs that vary state by state that we look at, but for the most part, we don't tend to see any issues with harvesting restrictions there. Probably the best thing to do would, be checking with the county and, look at any land records from previous owners. But again, that's something that we always like to do our due diligence on as well, as along with asking landowners. So tax programs, conservation easements, other lease programs out there are definitely the first places we look.
Okay, perfect. I think Dennis slipped in one last question at the very end, and I think it's worthwhile because it's always tied back to revenue, right? How much incentive is there for that landowner? And he put a question, and I think that you two are the only ones who can answer this. What are your projections on how much carbon credit revenue share will grow percentage-wise in future years relative to where we're at today?
So I can start, and then Matt, I'll let you jump in just quickly. So we currently have our forecasting set at price increases at 3% annually, which we think is conservative. And I will say that while we're setting up, we sold some of our improved forest management credits at $34 right now, and looking to sell some of our next batch at $34. So the pricing is really strong, and we are confident that we are going to stay in that price range for our IFM credit pricing because of contract length, co-benefits, quality, all of those things that I spoke to in my first half of the presentation. But Matt, what are your thoughts?
Yeah, I think Sarah explained that perfectly. And we always like to be extra conservative with our projections of those revenue share payments. But just over the past few years, the growth in the voluntary carbon market has just exploded. And especially, with carbon pricing ranging quite a bit depending on the specific project, we're able to really get this premium credit price from these certain requirements that we have in our program and that monitoring period, and a lot of these different aspects of the program that don't necessarily exist elsewhere, which is why, we're able to sell our credits at such a premium price.
Well, that has been really, really good. I really appreciate Sarah and Matt. Thanks again for your time. We're at the top of the hour here. Again, like I said, the presentation, we're going to be sending that out. Thanks for putting that together. It's a wonderful resource for everybody on the call. If we didn't get to your question, I apologize. It was quite interactive, and there's a lot of folks that we will be following up with you individually on your question, and you all will be getting a recording of this as well. So if you're interested and you have any other questions specifically for Matt and Sarah, reach out to them. You have their contact information if you're interested in the program. A great way for landowners to earn some additional revenue on their property. Matt and Sarah, they are the experts, and they're the ones that you need to reach out to. So thanks again, everybody, for your time, and you all have a great remainder of your week. Sarah and Matt, thank you very much.
Thanks, everyone.
Thanks. Thank you.